Hi guys, 2nd of August 2023, Wednesday, MAO with Cal, right? It's been a while since we last saw each other, right? Now the thing is this, both Michaels, right? Mike Wilson and Michael Hunnert, both are turning bullish. But wait a minute, aren't they bearish the whole year itself? Apparently they are. So now the thing is this, if these two Michaels are turning this bullish, what do you think will happen to the market? Well, that's where we're going to get into details. Let's go. All right, so disclaimer apply as usual, and thank you AIMS for the kind sponsorship. Now let's recap what happened. Now yesterday I uploaded a very powerful indicative trend line for an S&P 500. Now watch this video, it's only 4 minutes long. They're basically a recap of a very powerful trend line that happened since 2020, and I extrapolated it all the way until to date, and it's really amazing. All right, so this is a glimpse of it itself. This is more the end part itself, and you can see that it is really incredible. The touch point is really impactful, and where we are right now, we are exactly here itself. So if you look at it, if I extend it a little bit more, you can see that this is the trend line that we are facing it right now. So if the market really pulls back, where can we see the market going down? Well, it is possible for the market to come down to about 4485 region. Okay, now where are we right now? Is at 4560. So if the market do pull back to 4485, that is a point to watch out. It could be a time to buy back position. It could be a time to increase position. So I'll let you more in details. Yeah, so watch that video and you will definitely love it. Okay, so this is an extension of that. Okay, so the thing is right now, we all know that the retails are the one that are buying the market, right? Apparently, based on the Vanda research, apparently the last few weeks and months, retailers are the one that is buying the most. And while the professionals are getting out. This is interesting. So if you look at the chart right now, right here, if you see that, right, from my perspective, the market has been sideways for the last 10 over days. So if this is considered as basically the boys leaving from the market while the retail jumping in, then of course, guys, you should be very careful. But again, let's see how the market presents itself. All right, so let's review what happened last night. We have the Dow Jones still up by 71 points. That's incredible. But the thing is this, NASDAQ is down by 38 and S&P is down by 12. Now, one little company that I want to take a look is OXY. Their results coming out, and I believe that this result itself won't be fantastic because the last quarter we see crude oil energy prices coming down. But again, this could give you a very good time to buy into this counter, right? Believe it or not itself, Warren Buffett has been buying this every time you go to $60. So if this counter goes down to $58 and lesser, it's time to buy this counter. All right, take note of that. Yeah. Okay, so the S&P slips to kick off August with a negative number and down not just a small gain after touching the highest level in a year itself. Wow. Okay. So basically, we all know that the earnings season is coming to the end soon. And of course, there are some big companies that did pretty well, like Caterpillar, posted a strong result, boosting share by 8.9%. Now, I did say that in the last MAO that Caterpillar, the result will be good, right? So you remember that? Good. Now, the thing is this right now, some people feel that it's kind of overbought right now. And any pullback at this time now could be very expected. So that's why if you say coming back to 4456, I think it's pretty normal. It's like from here itself, it's like less than about 5%. So maybe this will happen, right? So with 82% of the company have topped their earnings, so probably it's a good time to lock in some profit if you ask me. And in fact itself, right, despite the performance right now, analysts are bracing for a 7.1% decline from a year ago. This is interesting. So let us see how things work. Yeah, but we all know that the U.S. job opening recently hit the 2-year low. Okay, though the labor market is still tight, there's still a lot of jobs available. But we look at the numbers. Now recently when we saw it went below 10 million, the market freaked out a little bit, right? Then after that, it recovers above the 10 million mark. So the market said, okay, fine. But now we are dipped below the 10 million mark again. And from this thing here, if you look at it from my perspective again, don't you realize that this is something very similar to what happened in 2008? Okay, it happened again the same way back in before the COVID crisis. So we can see that whenever the price, when the job opening goes up, right, it's because the interest rate was low. But once they have interest rate hiking in, you get to see jobs opening coming down. And of course, that usually spells recession. Yeah. All right. So the thing is, we saw this very interesting change of view in a way. This is one of the Chicago, Fed official, Goolsbee. He says that now he's not very certain. Now he is having the most dovish federal official, and yet he says now, I haven't made up my mind for what should happen in September. So that actually spooked the market a little bit, because we were expecting to be staying this dovish, right? But now by saying this, that could change to hawkish. And he says that maybe we get a few more major data points before next meeting to know more. Well, that means that the market is feeling, the guys internally is actually feeling the heat right now. So, but the thing is this, open timer, they are actually very bullish. They believe that S&P 500 was going to go to 4,900. Wow, that's amazing. Now, basically, they are looking at the market continue to go higher, believe that the money on the sideline may flow in the stock market in the coming months. So this, again, basically tells you a lot of the current situation right now. And of course, the thing is this, they feel that, right, this is going to be a great time to make some money from the market. And of course, what do you think? Let me know in the comment box, yeah? But on top of that as well, right, you can see his reason. Assume that the U.S. resilience will continue despite the rate hike. The Fed appears to be closer to a pause at the end, right? So that's what they are feeling it right now. And of course, at the same time, they feel that the capitulation by the bears means that the market, the money from the bear side will likely turn around and help the market to buy up. So basically, in short, it's very bullish, but do note they were actually bearish at the start of the year too. So again, it seems that everyone is flipping their position. And as a trader for so many years, I noticed something, whenever everybody's at the position, things may change for it as well. So what do you think? Let me know in the comment box here, because this is going to be very interesting. And with that itself, right, you can see now the current S&P is trading at 45.75 right now. So his target is at 4,900. So wow, that's another 10% upside. And the thing is this, the average numbers according to the polling, we have Morgan Stanley still at the lower end, but of course this is going to change because Mike Wilson is changing it. And the average number is about 4,450. So even if 4,450, we actually now at the same, we actually slightly higher than the average medium, yeah? So this is going to be interesting, because that means that the traders are still looking at the market come down, the profit taking. Well, it's all possible, yeah? And 4,456 is very near to what the number just mentioned moments ago. All right, now one thing is that the NASDAQ and Treasury, this is going to be very interesting. Now this chart itself is circulating viral in the market. Now you can see that the NASDAQ and the 10-year Treasuries actually move in tandem since 2021 until now. So basically they really move in tandem, but interestingly, ever since when the Federal Reserve came in to pump in the money to save the day due to the SVB saga, things changed really. Now you can see right now the NASDAQ has continued to go higher, but the Treasuries are going down. Okay, so the question is this, is the Treasuries going to go and chase after the NASDAQ? Now, the problem is this, if the Federal Reserve is not going to stop hiking rate, that's going to be quite difficult for the Treasuries to go upwards, right? Because yields and the Treasury price, they move inversely. So unless you're telling me right now, suddenly there's something that happened that causes the Federal Reserve to cut interest rate at a dramatic speed, then yes, the Treasuries will go up to meet the NASDAQ. But if there's something drastic that happen like this, wouldn't be the NASDAQ coming downwards also? This is interesting. So let's say we do this hypothesis. Let's say now that the NASDAQ has to come down because the Federal Reserve is not going to cut rate too soon. My goodness, look at it. If the NASDAQ is to come down, the NASDAQ have to come back down to 11,000 mark. Now do note, where are we now? We're 15,000 for the NASDAQ right now. Oh, that will be basically shaving almost like 30% of the current high. Now that is going to bring the market down to their knees. All right. So what do you think? Let me know in the comment box. This is really incredible. All right. The thing is this right now, the US state and local, the income tax receipt is now at one of the lowest point. The last time we see something similar was during the GFC, the global financial crisis. And of course, back then itself, there's one more that happened to the tech bust in NASDAQ in 1999. So now the thing is this, we are back here itself. Don't you know that something is just very wrong with the equation? Somehow someone is lying, and what do you think is going to happen soon? So with that, right, it's quite not surprising to see Fitch downgrading US long-term rating to AA+ from AAA. Now, this is something we saw before, right, in 2007 and 8, when Fitch and maybe someone else, I think S&P, came in and downgrade the Treasuries and then things get really out of hand, things really blow up. Remember that? So don't you think that this is actually repeating exactly what happened? Now, one thing is that when banks go down nowadays, they just keep quiet because another US bank has collapsed. It's Heartland Tri-State Bank. Now, hey, wait a minute. Didn't we don't see it on the internet, right? Yeah, apparently you don't see it at all. I did a Google and I don't see anywhere come to that. So that means that they just quietly, the regulators come in and just pack the bag for this bank who just went bottoms up, right? So the thing is this, belly up, right? So the thing is this, why is this happening right now? Because when the interest rate keep on climbing, people realize that, so people take the depositor, bring the money out from the banks. And if the banks doesn't have deposit, they cannot facilitate the business. They had to file Chapter 11. So that is what is happening right now. And of course, we all know that the Federal Reserve seemingly is going to still continue to raise interest rate. And of course, now with the energy prices at $82 per barrel for crude oil, and if this goes to 84, 85, this is going to definitely churn up the CPI figures higher. And then after that, Federal Reserve will continue to rate high. And if this is going to continue, things will get out of hand. Now, before that itself, we all know that Michael Harnett, who is one of the bear, says that the AI plays outperform the S&P, and he feels that the real rate now is not enough to pop the AI bubble. So in fact itself, he's telling the people that, okay, look, there should be further upside now. This guy has been bear since 2022. He was spot on, in fact, to the point of ridiculously accurate, but this year seemingly totally wrong. And of course, Mike Wilson from Morgan Stanley, who's the last man standing, he has changed his tune too. In fact, he feels that there'll be another 2019 light rally again. So this is Mike Wilson from this Morgan Stanley. So let's bring a video in of to talk about what his real intention of saying this 2019 rally. And of course, most important thing is we all know that he's been bearish all the way, and to change to the different position here doesn't really, gel well to a lot of people. So let's hear this guy out who is trying to explain why Mike Wilson is feeling this way. Let's go. Oh, okay, there's some sound issue. Just give me one.
But I just pulled up on my Bloomberg terminal what happened in 2019, almost a 30% rally. It ended badly in 2020 because of COVID. But here's a man who's been expecting an equity market sell-off, and he's comparing this market to a very strong rally, one of the best years for the equity market. What do you make of it, Eddie?
Yeah, absolutely. I thank you for sharing that piece of research because it's fantastic. I really liked it. I had a glance at it a minute ago, and you know what? I think what he's trying to get at here is that we are in a late cycle economy. Now we've got to think back about what 2019 looked like. People were expecting the end of the economic cycle at that point as well. We had a lot of recessionary signals. We had an expectation that a bear market was going to follow. Now, what nobody predicted, or very few people predicted, a COVID and a global pandemic, but there was expectations that we were late cycle anyway, that interest rates had gone too high, that there would have to be some sort of equity payment. Late cycle rallies are really interesting because they tend to be, they tend to get thinner. Some sectors tend to outperform, others tend to struggle. And I think if that's the comparison he's making, I think it's a very good one, because I think these are very difficult markets to invest in, exactly because volatility is rising and we don't know what to expect from policymakers next. All right. So in a way, it's all right. Mike Wilson is still bearish, but he feels that the market may have to really go all the way up. Like what happened in 2019, then the selling will come in. Okay, so I leave it to you to interpret what he mean. But main thing is this: for us itself in TWB, we are actually watching the S&P very closely right now because we've been selling the S&P at about 45.84 range, because that is our KFC level. You can see that the market has been trying to stay above it, but every time it failed, that's why we have been selling. And of course, right now, the latest update is that our KSI indicator has turned red color for today, but of course we don't use it now, but it's a good information. And even our KRW has turned to be slight red. So that means that the general momentum is in the selling. So that's why we believe that the market may be testing 45.24 first. And of course, it may go lower later, but we will watch the market closely. All right, guys. So hope this video helps you and may you make lots of money. This is Kel signing off. Take care. Bye-bye.